However, it is entirely possible that by the time rates normalize, housing prices will have only corrected 10 to 15%, and that they will have to resume because there's just no activity taking place.
Welcome to Acton Line, a product of the Acton Institute for the Study of Religion and Liberty. I'm Eric Cohn, executive producer. One of the campaign themes that launched Bill Clinton into the White House in 1992 was, "It's the economy, stupid." While much of our politics today is focused on the culture war, the economy is still the one issue that touches everyone, hence the salience of Clinton's slogan in 92. Much of the last few years have been spent concerned about the crushing effects of inflation. Previously on Acton Line, we've discussed the causes and effects of inflation that we've experienced with David Bahnsen, founder, managing partner, and chief investment officer of the Bahnsen Group. Today, David returns as we take a survey of the current state of the American and global economy, examine what's happening now with inflation, discuss the housing and rental markets, and then explore the economic effectiveness of conservative culture war boycotts. You can find additional resources in the show notes for this episode, as well as find previous episodes of Acton Line on our website at acton.org/actonline. And if you like this program, you can help us reach even more listeners by sharing it with a friend and leaving us a 5-star review on Apple Podcasts. We welcome your comments as well. Acton Line is available on Apple Podcasts, Google Podcasts, Spotify, or wherever you listen. David Bahnsen is the founder, managing partner, and chief investment officer of the Bahnsen Group, where he oversees the management of over $4 billion in client assets. Prior to launching the Bahnsen Group, he spent 8 years as a managing director at Morgan Stanley and 6 years as a vice president at UBS. He is consistently named as one of the top financial advisors in America by Barron, Forbes, and the Financial Times. He is a frequent guest on CNBC, Bloomberg, Fox News, and Fox Business, and is a regular contributor to National Review. He hosts the popular weekly podcast Capital Record, dedicated to a defense of free enterprise and capital markets. He is a regular lecturer for the Acton Institute and the Center for Cultural Leadership, and writes daily investment commentary at thedctoday.com and a weekly macro commentary at dividendcafe.com. David is a founding trustee for Pacifica Christian High School of Orange County and serves on the board of directors for the National Review Institute in New York City. He is the author of several best-selling books, including Crisis of Responsibility, Our Cultural Addiction to Blame and How You Can Cure It from 2018, The Case for Dividend Growth, Investing in a Post-Crisis World in 2019, and most recently, There's No Free Lunch, 250 Economic Truths, which was released in November 2021. David Bahnsen, welcome to Acton Line.
Well, it is so good to be with you.
So I want to have you back, as we do quite regularly, to talk about the state of the economy. I guess the place that I want to start, because it's been a theme the last several times we've talked, has been inflation. What is the current state of inflation in the American economy and the economy around the globe? What, if anything, has changed from the last time we talked, which might have been about a year ago?
Yeah, I don't recall last time we talked about it. It may have been, although actually I think we had an interval in between the 2022 university and the 23 university. But it's funny how, as you get older, all these events turn to a blur. But when we were recording for the poverty video and Michael Miller's event, wasn't that in between the two?
That was in November of last year. So, yeah, that would have been
so
in
we
between.
probably did get together on this somewhere in between. Look, I remain steadfast in the camp that if I was predicting that U.S. policy was creating a cycle of inflation, I'd be making the more bullish argument. I'd be taking a more optimistic view of what I think is really going on. Unfortunately, that isn't my view, and I think all those who have been very focused on the obvious headline inflation out of the COVID moment have had very justifiable reasons to be focused on it. but it's essentially all but disappeared. Goods inflation is effectively 0% right now, year over year. And on the services side, that is keeping the overall CPI number at 4%. You have 34% of that number coming from shelter. And that shelter number they're using is made up of two components, something called owner equivalent rent and something called basically new rental contracts. And
what is owner equivalent rent?
It's their estimation through a survey of what owners of homes believe they could rent their house out for. And so it's meant to capture some form of price inflation around housing, but connected to the housing values that are basically discounted cash flows. And so rents are a pretty easy way to figure out what rents are. It just is what it is. Someone signs a new contract to rent a home, but then there are a whole lot of people, over 60%, that own a home that aren't renting, and they want to solve for what they think that owner could be renting the home out for. And the two metrics put together make up 34% of CPI. And they have them at 8.1% on one of those and 8.6% year over year on the other. And I am trying to be as gracious as I can to say that perhaps the real number is as high as 2%, but I don't really believe that. I think actual year over year rent inflation is probably 0%.
Is this just based on just what people perceive it to be? So is because they're answering essentially a survey question, their perception of it is just higher than you think it actually is?
No, I don't think that's the biggest flaw. I think, first of all, the bigger flaw is in looking at current rents, that they're looking at what some lease that could have been signed a year ago. And most leases are 1 year. So you're going to get the data from each month within that, and each month it's rolling over accordingly. And I don't think that's generally a statistical problem because rents don't usually move rapidly up or down. The problem is that they did move rapidly up in 2021. And into 22, the first, what we now realize is about 4 to 5 months of 2022. So if in December of 22, rent increase was really slowing, and yet it was capturing the data from 1 year ago, the lag effect was substantial. And some critics of me on this point have pointed out that the same was true when they were moving higher in 2020, 21, that it wasn't yet capturing the violence of the increase in housing and rents. And I think that's a very good point and totally true, but I don't think it negates my point. My point is in the current state, Zillow, Redfin, Realtor, National Apartment Rent, there's about 7 different metrics that my group tracks religiously, all have rent price increase year over year, somewhere between slightly negative and as high as 2%. So if you were to adjust the shelter component to present state versus the statistical deficiency of this lag effect, at 34% of CPI, it would have at least a 1.5 effect on the 4% CPI, if not more. It would essentially bring the total CPI rate somewhere in the 2s, which is the Fed's goal. And so the fact that core goods has been so low and in fact seen some deflation for quite some time, and that more and more of the base effect of a year ago is rolling off, the annualized inflation rate on 6 and 9 months. So there's something counterintuitive about what I'm saying here. But if you were to annualize 6-month moves and 9-month moves, you're already at a basically 0 to 2% inflation, depending on how you choose to deal with shelter. So yeah, I think that there has been significant disinflation over the last year and a half. And
before we move off the disinflation, particularly when it comes to housing and rent, I can understand from our previous conversations too, and I've gained a lot of insight from the point you've made about the impact of the reaction to COVID, shutting down the economy, and the supply side driving a lot of the inflation problem. How does that connect to rents rising so rapidly in that period of time? What was driving these big increases in rental prices, even just kind of beyond the stuff that I would talk about and observe, which is which you'll get from a lot of organizations, not just Acton, but other groups on the right who look at the lack of stock, housing stock, and how difficult it is to build new housing, whether it's single family or apartment buildings, how much time it takes to do that. What was driving that period of big inflation in rent prices?
Well, one of the things I love about doing this podcast with you and pretty much all of my communications and activities with Acton is that we're allowed to have a more nuanced answer, and that multivariant explanations are tolerated, where sometimes in the Twitter sphere and certainly cable news, nuance is sort of the enemy and you're forced into a 2-3 minute soundbite. But this is something that's a bit more complicated, and that's one of the reasons why the inflation conversation is not a great political one, other than when everything's inflating at a real high level and there's a Democrat in office, then Republicans can just yell, look, the Democrat caused it all, which isn't a super intelligent prescription.
Well, and neither is the way we always attribute changes in the economy, whether they are positive or negative, to the actions of politicians.
Yeah, and the only way to break that, of course, would be for one side to stop doing it. And that's the problem, is that no side's going to stop, because it's too, like, if your party is in power and a good thing's happening in the economy, it's irresistible not want to take credit. And of course, we don't ever realize that, and that means in 3 years or 6 years or at some point in time, our party will be in power and bad things will be happening and we're going to take blame for it. And we don't realize that that's the other side of the exact same coin. And for someone to just say, I know my guy's in office and I know the economy's doing great, but my guy doesn't have a lot to do with that. It's because of this, and this. Well, what political consultant is going to write that campaign ad, right?
Yeah,
it's not going to happen.
It's reminiscent also of, as a sports fan, how coaches always get either too much credit or too much blame for the success or the failure of their team.
And there's a market reason in that, because they're paid so much that it would be really counterintuitive to suggest the guy you gave $10 million to when the average wage may have been like $800,000, inflation adjusted, somehow they've gotten like a tenfold increase in pay. And you better assume that they're really that impactful. Where on the presidential side, I think it's just rank cheerleading and partisanship. Yeah. But on the inflation side, the rents is still very connected to the supply chain story. But unlike the pure supply issues, meaning goods, that were cut off from shipping, from labor, from hands, from some intermediary part of manufacturing. That was a lot easier to track to supply chain disruptions during COVID. But of course, new construction of supply of housing was basically shut down too. It was technically rendered an essential service in most areas. But I'll give you an example. My wife and I have a house in East Hampton that we were renovating during it, and it got renovated. But there was one guy working on it every day for what should have been about a 3-week job, took about 8 months. One person was allowed in, right? There are other parts of the country that shut down construction entirely. More or less, we went for a 6-month period with almost no construction, a 12-month period with very impeded, and an 18-month period with pretty impeded. But then you say, okay, well, construction's back up and running. Workers can go back to work. It should all be back to normal now. But at that point, the goods inflation that had taken place as a result of complete shutdown of supply chain affecting concrete, cement, lumber, if you recall, was a major point. Then that was shutting down construction because people were unable to move forward. Finished product, housing product, couldn't get delivered because they couldn't get appliances in. You had all kinds of homes that were done, brick and mortar, landscaping, couldn't hand keys because it didn't have a refrigerator or oven because they couldn't get semiconductors that were necessary to all of it. So there was still a lot of supply chain interconnectedness that was leading to a slowdown of manufacturing and new housing stock, which was pushing rents higher. But the one area that I've always said, even though I do not believe monetary policy was a primary culprit of our inflation, I've always said that housing is a levered asset class and therefore highly sensitive to the cost of capital. And so to the extent that you got about a 40% increase from the middle of 2020 to the middle of 22 in median home prices, as the interest rate was stuck at about 0% for that entire time, the Fed funds rate, and mortgage rates average 30-year mortgage rates were about 2.8, 5-year rates were about 2.1. You just had free money that was significantly pushing home values higher, and there's a big correlation between rents and the sticker value of homes. So I think that rents had a double whammy of supply chain causation and monetary policy being forced near the zero bound.
What has been the impact of the increase in interest rates for mortgages on the housing market? Because I was actually having a conversation with my mother about this, who pointed out part of it is, what do you compare it to, right? You know, it's always a question that anybody from an economic perspective needs to ask about, what are we comparing it to? So if you're comparing the interest rates that people would be getting for a mortgage now to what they were getting 5 years ago, those interest rates are higher. My mother reminded me of, like, you know, buying a house in 1980, and, you know, they would have killed for the interest rates that we have even right at this very moment. What impact are you seeing of that increase in mortgage interest rates on the housing market?
Well, you know, I think your mother is right as a matter of just mathematical comparison and historical reference. But of course, there's nobody buying or not buying a home right now by comparing to the 1980 rate.
Right.
It's almost entirely anecdotal and non-economic. But what rates were 2 years ago, 3 years ago, 5 years ago is highly relevant. For a lot of reasons. This may have been underappreciated by everyone. I think it was totally non-appreciated by many. And I think I'd be included in the people that may have underestimated how severe of a factor this is. There is not right now a significant downward pressure on home prices. I think it's been about 7 or 8% so far, and it may end up getting 10 to 15, and I had originally forecasted 10 to 20, which was barely just taking the top end of froth from that 2020 to 2020 to 2022 final inning of that ridiculous bubble. It's just taking some of that froth off. However, it is entirely possible that by the time rates normalize, housing prices will have only corrected 10 to 15%, and that they will have to resume because there's just no activity taking place. And the reason is that virtually every seller knows rates are going back down and just figures, I can wait. But even more important than that, this is the underappreciated part that long setup was getting to. If you bought a home several years ago and you have a 2.5%, 3% mortgage, and now you're in a better financial position, you can move, you want a bigger house, you're ready to do it, you can afford, I'm making up a number, you have an $800,000 house, and now you want a $1.5 million house. You see, I recognize we have listeners all over the country, but like those numbers where I live in Newport Beach, no one would even know what I'm talking about because there are no $1.5 million homes. And then there's other parts of the country where people go, that's so ridiculous. So no matter what, I just realized I'm going to offend some people and sound like an elitist or sound, whatever. But use any number you want. If you could afford double the value of home you're living in, but your rate was 2.5%, and now it's going to be 6.5%, you're not selling.
Yeah.
And therefore, you're not buying the new house. And that is what has just frozen activity completely, where prices can't really drop when people aren't selling at lower prices, but nobody's buying at the higher prices. And so it's really, the Fed has sort of created an unresolvable issue here. I don't think there's very many sellers that don't believe that as mortgage rates come down, that they're going to see higher prices resume. And that is everybody properly assessing the supply dynamic you alluded to before. We're so undersupplied on housing stock, largely for regulatory reasons. There's still the slowdown of construction. And then there's just this crazy cultural dynamic of you need more apartments and less single-family residents when people get married at 38 instead of 25. And we're still adjusting. to the fact that there's a 25-year cultural change that is not affecting 1 million people. It's affecting 100 million people. And it has totally changed the dynamics of single-family residence.
That unresolvable problem that you said the Fed has created, let me ask you, it's a two-part question then. How does it get resolved? How should it get resolved?
Buyers and sellers should resolve it through free human action. And the problem is people want to buy a home. It's a good thing. But many people who hold homes believe that there is some merit in this permanently double-digit percentage rise in the value of their home. And you have people buying a home where the cost of owning the new home is going to represent 50% of their disposable income instead of 25 or 30%, which is a much more historically reasonable number. And so I wrote a piece at my own dividendcafe.com just last week where I basically said, look, this is a little less economic than I normally am in this weekly investment commentary, macroeconomic commentary. This is a cultural thing. I think that when you buy a home you can't afford at 30% of your disposable income and your cost to carry is going to be 50%, the first thing that goes is your relationship to civil society. You're out of the home less. You're in bowling leagues less. You're at Rotary Club less. You're at church activities. You're just at home. You can't afford to leave your own home. And so I'm very concerned, and this is one of the most nonpartisan concerns I have in the arena of public policy, because I think both left and right have sort of assumed that it's this wonderful thing to have this constantly escalating price of real estate assets. I don't agree. The cost of capital in the Fed is one of the problems, and the supply side is the other problem, and we need a lot more housing stock. And the way to get more housing stock is not with distortive programs and low-income subsidies and other things like that. It is to remove some of the extreme environmental, regulatory, zoning burdens that keep more housing stock from getting built. Home builders don't need to be told to make money. They can make money selling homes, and they rationalize it in their own assessment. There's almost no need for a central bank or a governor's mansion to be involved in how buyers and sellers and home builders all unite in the marketplace.
Before we get to the Fed, I do want to ask you, and I know we've covered this before, but I think within the context of this conversation, it may be good to go over it again. We did have all those trillions of dollars in spending that happened in 2020, 2021. What impact did that have, if any, on inflation? Because the political argument you talked about before, that's the line that's being drawn by mostly Republicans to say we've spent all of this money. Spending all of this money is what's creating the inflation problem, and you can blame Joe Biden and the Democrats for all of that. Certainly from my own fiscally conservative perspective, was not in favor of all of that kind of spending. But again, having talked to you numerous times about this now, I was never inclined towards that same partisan angle, but I'm much more weary of it now than I was before. But I think it'd be good for people to remind them, if they've heard this before or if they were listening to this for the first time, what was the impact of all those trillions of dollars that we spent on the inflation and economic problems that we've been seeing the last couple of years?
Well, I am in 30 seconds going to make the case that the massive multi-trillion-dollar excess expenditures and government spending, and particularly the government indebtedness that comes from that spending, that in my mind were not the primary cause of inflation in 2022. However, I do want to point out that what you just said was that a lot of Republicans seized it to blame President Biden, which would mean by definition that they found the excess spending in 2021 to be inflationary, but not the excess spending in 2020 to be inflationary. And that's a tough thing for me to wrap my arms around, how a dollar, we're saying that they printed too much money. This was the argument. And they did so because government was spending too much money. I think they're printing too much, and I think we spend too much. But the notion that the dollars are inflationary when a Democrat does it, not when a Republican does it, is an absurd, incoherent view. So let's go further back than COVID. And to make the point of how Occam's razor-ish my theory is about the lockdowns and the cutoff of production of goods and services being the primary causation of our inflation, the debt level, the spending level, deficit level, money printing level, M2 money supply growth level from 2009 to 2019, pre-COVID, was like something the world had never seen. And the Fed couldn't get above a one handle with inflation. They were desperately trying to create higher inflation. And inflating away some of the debt is the most, it's a hundreds of years old strategy. Politicians and central bankers, especially politicians, love being able to inflate away debt if that inflation level can stay moderate enough that nobody gets mad about it. So what was it about the national debt being at $5 trillion and going to $22 trillion in a decade that with both with Democrat under President Obama and Republican under President Trump, and I think I'm exaggerating a little bit because when Obama took over, the national debt was a little higher than that. But even if you go further back with President Bush,
I was just going to say there's certainly spending like that, or some that began under it.
But look, in 2006, debt to GDP, meaning the debt held by the public, not intergovernmental debt, was 36% debt to GDP. It's now 109%. Okay. And by 2019, it was 79%. So it doubled before COVID, debt to GDP ratio. Not just the absolute level of debt, but because GDP grew too. The debt as a ratio to GDP, the size of our economy, doubled. And inflation was non-existent. So I would prefer to just stick with a far better academic parallel, which is Japan, to make the point that the burden of proof is not really on me here, that Japan has 250% debt to GDP and has done that COVID-like spending every year, and they've had no inflation whatsoever. But there's always people that will just say, okay, I don't know Japan, or I don't understand either, or there's just something different. My view is that whether it's UK or US or EU, European Union as an aggregate political bloc, or Japan, there's overwhelming evidence that excessive government indebtedness puts downward pressure, does not make an economy too hot, makes an economy not hot enough. Do I think that President Biden filling out what President Trump wanted to do with that $2,000 payment? They only got in the lame duck session, they got $600 that they sent out to everyone. And President Biden did the next $1,400 in March or April of 2021. And it was absurd legislation. It passed exactly on a 50-50 vote. For whatever reason, Joe Manchin agreed to it. Kamala Harris broke the tie, and it was that second stimulus bill, which I think was the fifth COVID bill or something at that point. Do I think that it created a sugar high of new money supply, new spending? Of course it did. But that money stops turning over almost immediately. That's what we call velocity of money. That velocity collapsed very, very early on. And so I don't think it helped the inflation story, but that's not what we mean by sustainable growth of inflation. Growth of inflation requires money to continue turning over. And the other part of the quantity theory of money is not just the money supply, but the goods and services in the economy. And to me, the far, far more plausible explanation was always that we had reopened our economy with a massive level of demand, and yet reopened our economy with no capacity for production of goods and services.
So starting in March of 2022, the Fed begins raising interest rates, and the most recent announcement is that they're going to take a pause in those interest rate hikes. Is the Fed getting it right?
No, the Fed has gotten it wrong on both sides of this dramatically, and almost by design. I mean, the Fed's structure is to overshoot in times of easiness and then to end up overshooting in times of tightening. And again, let's evaluate what we're talking about here. The Fed had a reasonably normalized rate policy going in the financial crisis, and then we suffer through one of the great debt deflation crises, the Great Recession, the Great Financial Crisis since the Depression. And they go to 0% interest rate. So they go from about 5% federal funds rate down to 0. And then they stay at 0 for literally 8 years. 8 years. They raised 1/4 of a point in December of 2015 and then didn't raise it all throughout 2016. Then they begin tightening, but at this point, it's an unprecedented experiment in American monetary policy history. They had added $4 trillion to their balance sheet, and they started the process of quantitative tightening where they're letting bonds roll off, not maturing, and they're taking liquidity out of the financial system. And they're doing like $10 billion a month. It's really not very much. You're talking about $4 trillion. And they start increasing a little bit while raising rates, and credit markets throw up at the end of 2018, and the Fed chickens out. They had gotten the Fed funds rate back to, I think, 2.25% was as high as they got it. And they said, okay, we've tightened way too much. And they started coming back the other way. And then lo and behold, just a little bit over a year later, COVID happens and they go right back to zero. So more or less, you mentioned March of 22 when they first raised rates. And keep in mind, that was only a 1/4 point raise at the time. So from October of 08 to March of 22, rates were basically at 0%. For 14 years nonstop, with the exception of 1 year in between. So they were really overdoing the monetary accommodation side, and that came with a lot of big problems and distortions. Now I would argue that they've very much excessively tightened on the other side.
Why were they doing that? And so in having it basically at zero for that long period of time, what was the reason for that?
Well, remember, the entire time rates were at zero, they still didn't get economic growth above 1.6%. You had a couple years where it may have gone a little higher, and there was 1 year after Trump's tax cut, we got to 2.9, but we averaged over that whole period of time 1.6%. The entire time of the Obama administration, there was never a growth rate above 2, so you were running at half of your 70-year real GDP average. And so I think they realized that the economy was so fragile post-crisis that unemployment was really not coming back strong, and they just viewed it as this economy needs all the accommodation it can get. Now, corporate America reflated quite clearly, quite significantly, re-levered. Households did not, and that was what they were basically trying to do, was replace household leverage with governmental leverage. So households went from about 110% debt to assets down to 70%, and then the government basically went from the aforementioned 36% debt to GDP to 79% debt to GDP. So they kind of replaced household leverage with governmental leverage, but then the productive part of the economy was able to use low rates to kind of re-lever, and you had a lot of corporate activity and credit borrowing and whatnot. And I think the Fed looked at it like that's kind of the only game in town. That's the only thing that is providing any sort of backstop to the economy. And there's no one in the monetary side or fiscal side that ever stops to consider that maybe the economy, you can just take medicine out of the patient and let the patient's organs kind of function on their own. But in fairness, in 2018, Chairman Powell had been doing 2 levels of tightening. Credit markets threw up, and I think they panicked. And I'm never one who wants to accuse them of certain motives, but I think everyone wants to be popular, and it's not very popular to be in charge of the Fed when some recessionary conditions come. And that, I think, is really what's going on now, is that if they were to create a recession from current monetary policy, I think they'd reverse course in a second. I have no hope that they stop tightening at the right amount and then on the other side stop loosening at the right amount. That we have, for my entire adult life, been living with the excesses of booms and busts. And I think it's inherent to the structure of our current Fed that they overdo it both ways. But that's what the next 2 steps of this will be. That they will end up tightening too long, and then as a means of treating the problem they caused with the over-tightening, they will go way too loose for too long the other way.
I want to take a right turn, so to speak, in this conversation. I want to ask you a question that it comes from my own lack of understanding, I think, of some of the claims being made. So if you look at some of the culture war stuff currently going on, what happened with Bud Light and Anheuser-Busch and their engagement with Dylan Mulvaney for a very kind of limited promotional campaign. And then you have Target, which is offering for Pride Month certain LGBT plus clothing. And we see these efforts from the right to boycott these companies and the products that they are selling. And I've seen a lot of claims from some of the leading cheerleaders for this about the decline in either stock prices or in market capitalization for these companies, and touting this as a sign of the great success of these boycotts. So assume for a minute here that when it comes to stuff like this, I'm a dum-dum and do not understand the claims that are being made about market capitalization that is evidence of the impact that these boycotts are having. So how much is these fluctuations in the stock price and the market capitalization of Anheuser-Busch and Target, in your opinion, being affected by these boycotts? Are these people who are pointing to that as evidence of the success of these pressure campaigns? Are they right? Are they wrong? Are they somewhere in between? For someone like me who, is a dum-dum in this case, what should I understand about this?
Yeah, I mean, first of all, market capitalization and stock price are the same thing. It's just a different mathematical way of saying it, because all market cap is stock price times shares outstanding. And so your market cap goes up and down as your stock price goes up and down, unless someone's issuing a lot of new shares or whatnot. And so it's just a different way of algebraically expressing the same thing. And it's true, we're in between reporting quarters for both those companies since these things happen. So we don't have new updated numbers from the company of what their revenues are. And so when you see the market cap decline, the stock price decline, then there's a kind of post hoc reason to causally associate it with the boycotts. My own view is that anecdotally, it's far more likely related with Anheuser-Busch than it is with Target. I still think it has to be a factor with Target, but the problem is that there are a few different companies. Kohl's is one that sticks out. There are other kind of multi-purpose department stores that are not exactly the same market, but very similar, that have also seen their stock price drop by a proportionate amount to Target's, that were not a part of the extreme pride actions and the transgender thing, the kids and all the stuff Target was doing. So I think the bigger impact of the boycotts will have to be felt over time. But, there are counterfactuals that Walmart is doing very well in this period and Target is not. And so that could cause one to say that they think it is more directly related. But I think anecdotally, Anheuser-Busch, we have survey data, not from the company of revenue reporting, but from distributors that are saying, look, our order flow of Budweiser's dropped 20% or 30%. And so there does seem to be more connectedness there. And then qualitatively, I think it's not rocket science for, and you're a marketing guy. I think that Anheuser-Busch's brand is Middle America. And, I've confessed this for so many years now, I've lost track. I was dead wrong about Nike. I think that Nike benefited from what they did with Colin Kaepernick. I think it was a positive thing for their target market for a number of different reasons. Won't get into. They knew their customer. And apparently Anheuser-Busch didn't know their customer. And so I think that there is a benefit, but see, the problem is the stars have to align a little, meaning not only does a customer boycott, which 99% of them or 90% of them over time have not succeeded, but not only does it take a lot of scale and a lot of organization and a lot of power, but it has to be coupled to something more than just the outrage of some moral iniquity. Like in Anheuser-Busch's case, it not only has really offended the moral sensibilities of a lot on the right and the culture war, but it also was just sort of so off-brand. Like as a beer company that marketed itself to kind of middle America, it wasn't like a manly thing, no pun intended. You know what I mean? And so you got kind of a marketing impact in the boycott and the culture war values impact. Those stars don't align very often with customer boycotts. We'll see on the Target thing. If it turns out that there's a bit more ability to correlate here, then I'll do so. But I'm a little more skeptical of that one than I am Anheuser-Busch.
I struggle more on the Target one as well because there's a difference between talking about a Anheuser-Busch, which makes a line of products, beers, many different brands within that portfolio, and Bud Light being one of them, and then Target, which of course is a department store, which is selling all kinds of different goods. So that I think I did the blowback on that one of them offering just one of thousands of products being these Pride Month clothing items. Just drawing the line there, I think, is a lot more complicated than it is on the Bud Light side because you're talking about one specific product. Because even you can connect the two of them. Target sells Bud Light, so it's caught up in this in two different ways. In that it is selling the product of one of these companies that we're a little bit more sure of the impact on it, but it's also selling all kinds of other things as well.
Yeah, I think that the bigger impact would be in that loyal customer that bought whatever they were buying at Target before and now has just said, I'm switching my loyalty. Like instead of being it's not an impulse buy, like, hey, I need to run out and get a thing, or like a wife sending her husband to the store, I need you to go pick up this product. It's that household that gets hundreds of dollars of stuff every month from Target. They had a pretty loyal customer base, and you really don't need a lot. If you were to have 5% of loyal customers say we're now Walmart shoppers, that's a big deal.
But this is where I get skeptical about it as well, because again, talking about understanding your customer base, Target's positioning has always been a more bougie version of Walmart, whereas Walmart would be more targeted to that same middle America crowd that we were talking about. So if Walmart had done the same thing,
it would have been.
I think it would have been a disaster for them. But Target doing it, especially, I think I lived in Chicago for 15 years. There are Targets in a bunch of different places. I live in the South Loop, and there's a gigantic one right at Roosevelt and Clark that we would go to quite regularly. And again, I think we know the political, ideological makeup of major cities like Chicago. You couldn't find a Walmart in Chicago for a long period of time without going really far out into some of the more ethnic neighborhoods on the southwest side of the city, for example, down by Midway Airport. So again, it speaks to the different markets that these similar stores, in one sense, are serving different markets than the other is.
So the problem is, and again, we have done a lot of analysis on Target in our dividend growth portfolio at my firm because we have never bought it. And the reason is, and so I have a little bit of intelligence on this issue because I've always been quite surprised at how much we like Walmart's footprint and don't like Target's. The problem is that Target is still hyper dependent on a suburban customer. So look, if I were to concede that Target won't lose $1 of revenue from urban customers over any boycott, Pride Month activity, whatever, it's probably not true that they won't lose $1, but let's just assume they don't. The issue is with such low margins that exist in this line, in this whole industry to begin with, and keep in mind where the highest margins are e-com, and Walmart's growing at 30% a year in e-com, and Target's e-com has been an utter disaster. The margins are too low to take a 5 to 10% hit in your suburban markets. And I think that's where Target is possibly going to have a vulnerability.
Well, I wonder about that too, because, to tie it into the political machinations of the last 8 years or so, one of the problems for the Republican Party has been sacrificing who had previously been reliable suburban voters in favor of the Trumpian white working class demographic that has delivered for Donald Trump once, and the giving that up in favor of giving up the reliable suburban vote in favor of one that is less reliable. If we're assuming then that this is an indication, at least of this period of time, that the suburbs are in some political understanding, moving to the left. I wonder, how much that's going to matter to Target then.
So let me tell you where I come down on that, because I'm basically following your train of thought exactly. And it's, to me, a great encapsulation of what the political tension is, that the Republicans, more or less in the Trump moment, picked up a lot of non-college educated white working class men and lost an awful lot of often college educated but married.
I wanted you maybe to say they've picked up a lot of Walmart shoppers and lost Target shoppers.
That's right. However, I don't think those Target shoppers and those white suburban women dislike our view of the culture war. I think they dislike Donald Trump. And so it's entirely possible that we talk about split ballot voting in an election. You could get a split ballot vote, meaning, yes, we're that person that didn't want to go along with Trump in 2018 or 20 or 22. Yet, yeah, Target putting transgender LGBT paraphernalia in a counter display targeting 12-year-olds. Well, I still don't like that very much either. And so you could still very well have a tension within that very demographic we're both talking about. But again, it's all on the margin, as all economics is. And that's what we'll have to kind of see more of. The other issue of boycotts, too, is that they're very, very hard to sustain. And that's the amazing thing about Anheuser-Busch, and it has a lot to do with just a pretty bungled PR response. But, there's things that have happened with United Airlines, with Delta, with Major League Baseball. There's things that really fire people up at given points in time, and they don't generally last. It's hard to stay mad at a company. Have you ever had an experience with a restaurant or a rental car or a hotel, and in the moment you're like, I'm writing a letter tomorrow. I'm so mad. And the next day you're like, no, I'm not. I have a job. I have a wife. I have no time to write a letter, because you just calm down. That's really the issue in the boycotts, is a company has to really step in it to keep people mad. And somehow Budweiser managed to do it. And I think that Target, at some point, it's very possible they move on.
Yeah, over all the years of my political involvement doing this kind of stuff, I would have not lost a lot of money if I would have bet on the ineffectiveness of boycott campaigns, really from either political side. Yeah. Although I will give the left a certain amount of credit that kind of boycott culture, I think, is a little bit more inculcated into them than it has been into the right. Which is why I was.
You think that they do it better?
I think they generally do it better. I think they commit to it in a little bit more serious of a way.
So, what's an example? Are you talking about like Chick-fil-A or something?
Yeah, I think that may be a good example, because I do know I know people. I would say friends from college. So I have a degree in music from a liberal arts college. I had a lot of friends who were on the left, even some from areas where Chick-fil-A was before it started spreading across the country, who loved it and who won't eat there anymore. And I still know are committed to not eating there anymore, even as it's gone into New York City, where one person I'm thinking of now lives. Always proclaimed how great Chick-fil-A was to me. And then as it's learned that Kathy is a donor to a lot of religious causes that opposed gay marriage, have decided I'm just not going to patronize it anymore. That's a very anecdotal example. But I think the level of commitment that I have seen there and the follow through on it is more than I generally see from the right. I think the right makes these gestures at like, we're going to boycott it. And then that disinterest almost immediately sets in and they move on to other things. And it just kind of falls apart, which is why I was surprised by how the Bud Light thing, the Anheuser-Busch thing, initially I wanted to dismiss it as, people were starting to champion how successful this is and is going to be. And my inclination was to say it's going to fall off pretty quickly. And that one has surprised me at how much it's stuck so far.
Yeah, so I agree with you. I don't know, though, that the Chick-fil-A boycotters were very natural Chick-fil-A customers from the left even before. And then, I think of like the Chick-fil-A that is on 6th Avenue and 46th Street in New York City. It's a kind of across the street from where Fox News is, but down like 1 or 2 blocks. And it's pretty much just constantly always packed. There's still a real urban that's very non-political clientele for it. But
Same too in Chicago. There's one just next to the Chicago Theater on State Street, and it's always busy.
I think that one of the beauties of a 50-50 country is that boycotts are almost all zero-sum. that the louder people on the right could have been when they were mad at Colin Kaepernick and Nike and anti-patriotism, that for every person that they lost as a customer for that, the boycott was creating a customer because there was someone else who felt animated on the other side. And so boycotts do shed customers, but they create customers. And I know that's true with Chick-fil-A, that the louder the left was in protesting Chick-fil-A, which was largely a very southeast Bible Belt fast food chain.
It originates in Atlanta. Yeah.
And it became really a big deal in more kind of urban and hip markets. And I don't want to say it got cosmopolitan. It's a fast food restaurant. But it did go into nicer areas as their reputation as Christian chicken was growing. And I think that is a byproduct of the 50-50 nature. And boycotts are largely, that's what I'd say, they're largely zero-sum. You know, it's going to be disappointing to a lot of those on the right of the culture war, which I am. I'm a right-wing guy who's a traditionalist in so many ways, but I'm not a big boycotter. But it's going to be very disappointing for people if they do find out that the real success of the Anheuser-Busch boycott was not values-driven, but it was the cool factor. Like, I'm not drinking this beer that these weird you know what I'm saying? Like that they may have just actually violated the kind of machismo of beer drinking, you know, Budweiser, that may be more of what this shtick is than anything else.
Before I want to move on to China, but I think you could make somewhat of an argument. Like, I get what you're saying, that you're not really going to call a fast food place cosmopolitan. Yeah. But I think there is something about, and you have to acknowledge that it is informed by the Christian orientation of the founders of Chick-fil-A. You know, just the difference in experience, that even if it is a fast food restaurant, the fact that, you know, when you say thank you, which, you know, especially as a Midwesterner, is, you know, just you so readily do when someone hands you something and they say, my pleasure. It's such a more pleasant experience than your average fast food experience, that even if it is still a fast food place, it feels different to you. Oh,
that's right. Now, I know much of like kind of east of the Rockies, people aren't that familiar with In-N-Out Burger, but it is by far the best fast food chain in America. It's Southern California based, and the founders were all diehard Christians, and they tragically died in an airplane accident right outside one of my offices back in the 90s. And their granddaughter of the patriarch who runs the company now is a diehard believer, know her well. But see, they're fully private, and that's a huge factor.
Well, isn't there there's a Bible verse on like the underside of the cups? Yeah,
they did it for years and years and years, and the left would love to have said, we're going to go for a boycott of In-N-Out. She gave to other causes and whatnot. Didn't really trounce. There wasn't a thing like being closed Sundays, and they didn't have a public foundation that people like with Chick-fil-A's owners that they were able to go after on the Form 990 for what they were giving to. But there was no ambiguity about the religious and moral commitments of In-N-Out, yet the left would never have gone after it because it was impenetrable. I mean, it's a place that, you know, it's that Yogi Berra line. No one goes there anymore. It's too crowded. Yeah. It's why my wife and I can't stand it, because the drive-thru is 45 minutes long and it's time I don't have, but they're just the best burgers in the country, right? That's the thing is, the boycott thing is generally so selective, and that's what the mystery is on the Anheuser-Busch deal, was the asymmetrical risk-reward of what the company did to begin with. Like, let's say there was absolutely no backlash at all. What was the upside? I mean, how much more beer were they ever going to sell? I'm not sure that there was any upside if it had gone perfectly for them.
Did you read Abe Greenwald's piece of commentary about the rise of the spokestroll, which is, it is certainly a different approach to marketing these kinds of things, that part of the, you know, to think of it as part of the goal is to improve the popularity of the product with a certain market by making a different market that the one you're after hates angry.
Yeah, counterintuitive.
Yeah. So I'm very hopeful, because again, as a marketing guy, if that is an active strategy, and I don't know that it is, you know, it's cock up before conspiracy, never attribute to malice things that can be easily explained by stupidity. Yeah. And I think the Occam's razor explanation was that it was just a stupid decision by people who didn't understand their customer very well, which is a massive failure.
You say by people, and I think it's important for people to understand right now the state of corporate America, because I'm convinced of this from some of my own efforts on the shareholder engagement side. Sometimes it can be a person that has people afraid to talk to push back on the person. But you get one 28-year-old woke marketing person running with a transgender idea, and you get 30 middle-aged white guys that are afraid to say no. That's people, but it's a person driving.
What do you think that person's probably looking at someone like Dylan Mulvaney, and what they're looking at is the follower count of an influencer. They're going to say, like, lots of people watch this person's videos, so, like, let's get this person to promote our product, and only good things will come of it, without thinking of, is this a fit for our brand? Is it a fit for Bud Light specifically? Is it fit for Anheuser-Busch? Is there even like a different beer product, or is it a seltzer product that they could do this with that would not have the same backlash, that would not create the same backlash that we saw?
And I also think that sometimes it could just be the naivete of looking at follower count, not knowing your actual customer base. But other times it could be ideological. I don't think that's the case at Anheuser-Busch. Whoever made this mistake, I think just it was stupidity.
Yeah.
But with Disney,
or maybe a little of both.
I think with Disney, it was pretty crass ideology. From at the time the chief marketing officer, had a real agenda there, and in some of these cases, these are fascinating things. They're basically aware that it's bad for business and they want to do it anyways. That's where I think the boycott has to happen. Not the boycott, but the engagement has to happen from shareholders, because the owners of those businesses are entitled to a fiduciary treatment that is better than someone doing something like that.
Well, I was going to ask you about what's going on in China, but we've been going for a while, and the good news is that you've always been so generous with your time with us at Acton, so we'll have you back on to talk about what is going on in the Chinese economy and how that is affecting everybody around the world. So we'll talk about that next time. But for now, David Bahnsen, thanks so much for joining us today on Acton Line.
Thanks for having me, Eric.
As always, thank you for listening. Our team loves putting this podcast together for you. It's encouraging to hear from our listeners. Feedback is incredibly important to us because it lets us know what you'd like to hear more of, including the kinds of topics you're interested in most. If you have comments, feedback, or ideas for a show topic or interesting guest, you can email our team at producer@acton.org. Until next week, for Acton Line, I'm Eric Cohn.